Okay, welcome everyone. Thank you for attending today's session. So I'll start by presenting Dr. Foued AYARI, a PhD holder in financial economics from the University of New York and now head of Department of Finance in INSEEC, Institute of Higher Economic and Commercial Studies. Dr. Foued has 12 years of experience in New York, working for several financial institutions and universities, and he is also the founder of BullQuest, which is a training and consulting company based in Paris and specialized in CFA and PRM certifications programs. So today, Dr. Foued will be presenting us a very important subject: Tunisian monetary policy and a crypto world and the securitization market in Tunisia. I give you the floor, Dr. Foued.
Thank you, Reb. Thank you so
Thank
much.
you. One small thing.
Yeah.
For participants, please do not hesitate to ping your questions during the presentation, and we will be discussing them later at the end of the presentation. Thank you.
Thank you. Well, thank you for having me, Sami and Ribab. So I'm going to get started with the presentation. Okay, so I'm going to talk about Tunisian monetary policy in the crypto world, but also the securitization in Tunisia. In fact, I know there was a session, I think yesterday, with Walid Idris on CB DC, so I won't be staying long, but it'll be good to actually go through that and then head into something which I think is probably quite new for a lot of people, which is securitization. So let's get to that. So this is the agenda. The short view was beautifully given by Rebeb. Thank you. So now the agenda is we're going to look at monetary policy and the rise of cryptocurrencies, and think about whether it's actually an opportunity or a threat for monetary policy. Then we'll look at how actually central banks are reacting, and you've heard about it probably yesterday. I couldn't, attend the whole thing, but a lot of central banks are, working on central bank digital currency right now. Then we'll go closer and look at Tunisian monetary policy and see and that would be my opinion, what the Central Bank of Tunisia should actually approach this issue, having a lot of cryptos everywhere, more than 12,000 cryptos right now, with a market capitalization of about 2.8 trillion, which is huge. We'll talk about it. And we'll see some example what happened in El Salvador. Could Tunisia follow what El Salvador did when they made the Bitcoin as a legal currency? Still with the US dollar, but Bitcoin is there too. Or is the way forward the case of Sweden? We'll talk about it. So that could be actually a chance, probably to leapfrog, to bypass, several steps. The next section would be on securitization. So what is securitization? You probably heard, maybe some of you who are in finance heard about mortgage-backed securities, asset-backed securities, CLOs, which are collateralized loan obligations, CDOs, which are actually CLOs and CBOs, collateralized debt obligations. You probably heard about that. Finally, you probably heard about that right after the financial crisis. They've been criticized a lot. Securitization actually is a process that turn illiquid and non-marketable assets into liquid and marketable assets. So the idea is to explain, first of all, what these are, why they are used, why is it interesting to actually do it, and then look at the Tunisian securitization market, which is quite small, but to try to think of what Tunisia could actually do to enhance this market and have access to, for example, cheaper financing. So that would be the program. So let's talk first about monetary policy. So you all heard about following probably the main central bank globally, the Federal Reserve in the US, the European Central Bank, the Bank of England, the People's Bank of China, Bank of Japan, and so on and so forth. All of the central banks have, basic functions, of course, clearing, regulations and stuff, but they also have monetary policy. And monetary policy is basically, the goal of monetary policy is to try to impact the quantity of money that is available, to try to target a certain variables. For example, inflation. That's the case in most of the countries. Monetary policy is done to target a certain level of inflation. We talk about 2% in the US, a little less, but closer to 2% in Europe. Usually, so central bank would actually act through a transmission channel by certain types of monetary, by tools, right, that they have at their disposal to reach a certain level of inflation. Certain central bank would actually have more goals than just the inflation. If you take the case of the US is targeting inflation, but also it's targeting economic growth, and it's targeting also employment, full employment. Actually, now they have changed. So to do that, they would need, of course, to have an impact on the amount of money that's available, right? And the way to increase or decrease the supplies, they could do interest rates, they could do several things, bank reserve, and so on and so forth. But the idea is monetary policy cannot be done if they don't have full control of money. And this comes to the point where, as of today, cryptocurrencies, with Bitcoin ahead of everyone, represent a market cap of about 2.8 trillion. So it started to actually get more and more attention from regulators, from central bankers, from actually a lot of participants. And the idea is, if cryptocurrency gets really, really a lot bigger, they could pose a threat for monetary policy, because, in order for monetary policy to be effective, well, obviously, the cryptocurrency market has to stay within certain range in terms of size. If they become very big, which is what is going on right now, the monetary policy may lose actually its impact or its effectiveness. So crypto, 12,000 coins already in the market. And just to get back to the initial paper, actually, of Satoshi Nakamoto, which we don't know who actually it is. He wrote at the beginning, in the abstract of his paper, a purely peer-to-peer version of electronic cash would allow online payment to be sent directly from one party without going through a financial institution. That term, without going through a financial institution, is very important. We can bypass financial institutions. And obviously, that could represent a threat, because all current cryptocurrencies are controlled by private entities, so that the issue of the impact on monetary system would become very important. Autonomous decision by private entities concerning money supply could diminish the ability of central bank to implement monetary policy effectively, which is what I said before, like you see on the picture, Jerome Powell, the president of the Fed. So the idea is, would that represent a threat? Or is it just going to pop up like the tulip in Holland, or like any other crisis that we had before? Is it possible? That's the whole question. Now, first of all, we need to kind of ask the following question: do you think that currency, bitcoins, cryptocurrencies, excuse me for a second, do you think that cryptocurrencies are actually are they currencies or commodities? That's the whole first question. So in order to answer that question, usually we define money with three features. Money has a store value, a medium of exchange, and we can also use it as a unit of account. The question that we can ask right now is if you take the example of Bitcoin, is Bitcoin actually a medium of exchange? So how many people are actually using Bitcoin? Excuse me, I'm going to just turn my headphone. How many people are actually using Bitcoin as a medium of exchange? Very little. Even though a few companies have said that they were accepting Bitcoin as a means of payment, in reality, it's still quite low. So as a medium of exchange, I would say that Bitcoin is not going to represent, this feature. It's not going to be a medium of exchange in the, as a typical money, as a typical currency. Store value, yes. Unit of account, it's also possible because we are able to price it. We are able to price certain goods or services in Bitcoin. So store value, unit of account, yes, but medium of exchange, it's kind of a little bit difficult. Second problem with the Bitcoin is the volatility. Volatility is an issue because if you talk about money, a currency is supposed to maintain its value over time. It's supposed to retain its value over time. And if you are pricing certain goods or services, in fact, what might happen is the fact that we do have volatility is going to impact, will not be good in terms of monetary policy. So volatility is an issue there. Now, is it going to be a threat or opportunity? As in terms of opportunity, it's quite interesting because of the blockchain technology. But in terms of threats, a while ago, just a couple of years ago, we were looking at the broad money, which is M3 in the US, it was at about $14 trillion. So broad money M3 level was at about 14 trillion, while the crypto money at that time, the market cap, the market capitalization, which is simply the price of crypto times the number of crypto, was at about, in 2017, was at about 0.1%. So it was, still going up, but it was not big enough to represent a threat with respect to monetary policy. Nowadays, it moved up to about 2.8 trillion. And it started to represent some kind of threat. There are several reasons here. The first reason is the size, obviously. The size gets a lot bigger. The second reason is monetary policy. And how we actually can see that, well, first of all, you got, as I said earlier, we got a lot of banks, central banks, who actually started to think about a central bank digital currency. Quite a few countries have started to work on this. We can talk about China, for example. China has started to implement and test the yuan, and they also, at the same time, tighten regulations on cryptos, because actually that could represent a threat. The next thing that we can see is, is the size. If the size keeps moving up to 2.8 trillion, well, obviously that could pose a systemic risk. Okay? So the first thing that, if I kind of looking at opportunities, but also threats, the idea is, first of all, is it a commodity or is it a currency? Is it possible that one day one cryptocurrency, let's say the Bitcoin, becomes the main currency globally, worldwide? And it is important to think if it's going to be like a commodity, like gold or silver, or like a currency. The problem with is that as a currency, there's no central bank. Currencies are regulated and by central banks. So obviously the Federal Reserve Bank of the U.S. Federal Reserve, I'm sorry, but also the European Central Bank. They all control the currency, the euro, the US dollar, and the other. So if you have a currency that is not under the control of any regulator, that actually may pose a problem, not only in terms of systemic risk, but also in terms of monetary policy. The second, and I already said it, it's volatility. The third, and that's quite an opportunity, it's the blockchain technology. Systemic risk, I spoke about it. Monetary policy is less effective if those cryptos actually challenge fiat money. The other risk that we have in the crypto world is money laundering, but an opportunity there is the decentralization. So central bank's response might actually increase the effectiveness of central bank basic functions. And one of the response, and I know you had a session on that yesterday, is the CBDC. The other one was stablecoin, which already started with Tether, and I think Facebook is going to launch the DM. The difference is stablecoin it's a private entity or private organization that's launching the stablecoin, and stablecoin are simply digital currency that are coins that are backed by an actual hard currency. So the way forward, it's probably for central bank to actually, move on to work on, build on the CBDC, the central bank. So should the Tunisian central bank get into the central bank digital currency? My opinion is they should not right now. The reason why, it's because we already have a lot of banks working on it, a lot of central banks working on it, and these are big banks. They will obviously have a lot of resources, and these resources, could be used for other things. So it's actually better just to wait to see how the Chinese central bank, how the People's Bank of China is doing with that, how the ECB, which might take, I don't know, a couple of years maybe or more, in Europe to come up with a digital currency. We have to wait also for the US. We have to just wait and see, and then maybe later that might happen. So it's better to wait and see, but especially because it costs money, right? I mean, and those resources could actually be used somewhere else. I'm talking about the Tunisian central bank, because Tunisia is a small economy with 12 million people and a GDP which is close to $40 billion. So it's nowhere near, the US or China or Japan, or any big country. So the central bank, the Tunisia, should instead focus on digitalization, just because that leads to greater financial inclusion, and that has consequences, but actually will make the system more efficient. So this actually should be then targeting more digitalization in Tunisia, building a more effective monetary policy in the forthcoming cashless society, because that is happening. I mean, if you look at Sweden, for example, Sweden is, the number of people actually who are using cash went from 39% to about 7 or 9%. It's the country, I think, in Europe where cash is used the least. So it's almost a cashless society. So it doesn't mean that we're going to move on in the future into a society where it's going to be completely cashless. But obviously, we are getting into that way. A higher degree of financial inclusion would make monetary policy more effective also, since we will be able to reach part of our economic ecosystem more directly than we currently are. Central bank would have access to much more granular data of where the money is going and where debt is accumulating in real time. So public sector cryptocurrencies might actually provide an interesting solution. They would be backed by government and thus better fulfill these three functions. They could reduce reliance on private bank and credit card payment systems. They could reduce the cost of money compared to paper money, and obviously they could just increase consumer protection. So there's another thing that I already spoke about. It's the tax collection, for example. If everything is digital, obviously tax collection, which is an issue in many countries, could be more effective. We also, I think, could increase the remittance, when people working overseas are sending money back to their country. Criminal activity obviously would be more controlled. It would be more effective to fight against criminal activities and tax evasion. But obviously, the government control and discretion could be a problem. So as I just mentioned, a minute ago, so that was 9%. From 2010 to 2020, the proportion of Swedish using cash has fallen from 39% to 9%, according to Sweden Central Bank. The use of cash is most limited to making small payment and by the elderly. In shops and cafes, it is much more common to find the sign card only or cash free than cash only, as in many other countries. According to Eurostat, 84% of the Swedish population made purchases online in 2020. Well, putting the country among the top actually in Europe. So this is in terms of digitalization. So this is not the crypto thing. This is really in terms of digitalization. We are heading into a cashless society. I don't think it's going to be completely cashless, and not now, and it's going to be probably different in different countries. But I expected that that we're going to move to that fairly quickly in developed countries, and a little bit, less quickly in the other developing economies or emerging markets. However, that could be an opportunity for them to actually leapfrog, to bypass some steps by increasing the level of digitalization. So Sweden was an example. The only first country that actually moved to Bitcoin, to accept the Bitcoin as a legal entity, legal currency, it's actually El Salvador recently, and I think we have to wait and see how things work, because obviously a lot of people use that. I think half of the Salvadorian are using that, but in Salvador, the US dollar is still also another legal currency, legal tender. So we have to wait and see, especially that in Salvador, obviously everybody get that app, right, which is the Shivo wallet, but not to forget that people were given $30 to actually get that app. So a lot of people did it because $30, that's a lot of money when you know that the average salary or revenue in El Salvador is around $300 a month. Okay, and I showed you also a little picture over there. I have a friend of mine who actually got into this company, which is called MoneyWalkie. It's another example of how we're moving into a cashless society that actually impact and affect everyone, not only the adult, but also the kids. What you see over there, it's called MoneyWalkie, little panda, and it's a startup. It's a French startup that actually created this wallet for kids. So kids, when they don't have school, let's say on Wednesday or Saturday, and if they want to go to buy something at the grocery store, they don't have to carry money anymore. They can just use this, and it allows the parents also to control their expenses. So it's a startup that was just, so it's an example of that actually the cashless society is moving also towards even the younger ones. So finally, Bitcoin peer-to-peer technology and decentralized system have the potential to append the role of central bank in modern financial structure. You got to understand also that central bank, for example, if you're looking at the U.S. central bank, the U.S. central bank did not exist, or they have tried it before, until the beginning of the 20th century. the U.S. Federal Reserve was created by Act of Congress in 1914 and 1915. Before that, there was a few attempts for a central bank in the U.S. for 20 years, and then it didn't work. So the role of a central bank, obviously now in 21st century, is much more important than what it was before. But the issue of money, the issue of currency, is a main problem. Why? Because after the Second World War, there was Keynes who actually proposed to have just one single currency for the entire world. They didn't agree. I mean, there was a proposal. I think he wanted to call it the Bancore, which would be just one currency for everyone. Why? Because, well, we had some fluctuation. We were under the gold standard, then it stopped, then we moved into a gold exchange standard, where actually currencies were fixed among themselves. But that didn't hold. One of the reasons why it didn't hold, it's because when you fix exchange rate among currency, like at that time, French franc or the Dutch mark and the US dollar, the British pound, etc., obviously that is based on fundamentals, and fundamentals are, should explain, like interest rates, economic growth, should explain the level of the exchange rate. So if you maintain them fixed, even though they were adjustable but it was just adjustable by 1%, obviously that didn't work early in the 70s, and all the currencies started to fluctuate. So it creates some volatility and inflation. But if we were to go back to one single currency, I don't think it would be a cryptocurrency. It's just because of regulations to control, to be able to stimulate the economy, to control the inflation, to stimulate the economy, for example, by lowering the interest rates to boost the economy and moving out of recessions. I mean, all the tools that are available to central banking usually. So I doubt it, but that's my opinion, and only my opinion. Okay, so now we're going to move to the second part, which is securitization. Okay, I think I'm good on time. We are moving to securitization. So securitization in Tunisia. First of all, I did work on securitization when I was back in New York. After the PhD, I did work at the New York State Banking Department, and then I was an analyst there. So I had dealt with some of these issues. And just to explain what it is, that the definition of securitization is to transform illiquid and non-marketable assets into liquid and marketable assets. Why these could be very interesting for Tunisia? Well, let's see why it's interesting for the other country first, and then we get Tunisia. Why is it interesting? In fact, the business of a bank, the main business of a bank is to lend money, right? So they lend money. When they lend money to, I don't know, student for student loan, credit cards, auto loan, consumer loan, business loans, mortgages, right? Real estate loan. The bank, in fact, has a choice when they lend, let's say, they give out mortgages. They end up with portfolios, right? So in the balance sheet, on the asset side of their balance sheet, they end up with portfolios of student loans, portfolios of auto loans, portfolio of mortgages, and so on and so forth. And it's up to the bank to actually decide if they want to keep these portfolio into their balance sheet too, or they can just take it out. One way to take it out, to sell it, because you cannot sell one loan. I mean, it's very hard. It's quite non-liquid, the market. They actually use what we call securitization. So in fact, the portfolio of, let's say, mortgages will actually leave the bank, okay, will leave the bank's balance sheet on the asset side, and would actually be sold to an SPV, a special purpose vehicle, which would pay by issuing notes. Okay, so here you can get that picture, which is an interesting picture, where you can see here the bank lending to John 150,000 to buy a house. Obviously, the bank is going to lend to John, to everyone. They're going to end up with portfolios with thousands of mortgages, and the bank can actually either keep it in its balance sheet or sell it. Why would it sell it? Why would it do use securitization? Well, there's a lot of reasons. For example, the bank, could get cheaper financing. The bank could proceed to some arbitrage. The bank could release some of the reserve, could transfer the risk, the credit risk, and so on and so forth. So there's actually quite a few reasons. We'll get back to this in a moment. But the banks, the bank here ends up with a pool of mortgages, and either they keep it in the balance sheet or they take it out. If they take it out, they're going to sell it. Okay, so probably here in this example, you have a large bank buying it, but the bank is going to actually issue at some point what we call mortgage-backed securities, and investors are actually going to buy them. So at the end here, you have investors buying those notes from the SPV set up by the large bank. SPV is what we call a special purpose vehicle. And what would happen is when John pays his mortgage back, so every month he's making the payment of principal and interest, well, that will be paid directly to the investor. Of course, not exactly the same amount. It will be a lower interest rates. But after all, these notes that are issued are going to be rated usually AAA or AA. So let's see how it actually works. So in its most basic form, securitization is the process of converting ordinary asset into tradable securities. Equities and are securitized ownership of a company, bonds are securitized loan, and warrant are securitized right in new shares at a fixed price. Securitization will also be used by an entity to turn asset into cash. So as I said, you have the typical balance sheet, asset and liability, and you can just, take your the asset that you have on your balance sheet out to the market by using what we call securitization. So here you have a mortgage of pool. These mortgage payments are going to go to the agency or the institutions, whatever. That's going to set up a special purpose vehicle, and special purpose vehicle to pay to pay the originator, which is the bank initially that lent the money. They're going to issue asset-backed securities or MBS. In fact, they are all asset-backed securities, but the idea is the SPV is going to finance its purchase of a portfolio of mortgages by selling to investors notes, like bonds, that pays whatever interest, let's say 3%, but they are rated AAA, as an example. I'm just going to back here. So here you have when it's backed by mortgages, residential mortgages, we call them RMBS. When it's backed by commercial mortgages, we call them CMBS, commercial mortgage-backed securities. And when it's backed by auto loans or consumer loans or car loans and so on and so forth, we call them ABS, but they're all actually ABS, okay? So we also call them pass-through because we really are passing through the payments, right? It's just, there's a cut, obviously, because there's a lot of participants, much more than what you see on the picture. There's the rating agency, there's a lot of participants into this operation. But the idea is we can do it actually two ways. We can do it either this way, where you have a single tranche, or we can just issue several tranches. Several tranches means that we have tranche A, B, C, D, and so on and so forth, with different size. Okay. So this is the main mechanism. So again, the originator is the one that is selling the portfolio of assets to a special purpose vehicle, okay, which we call in French le fonds commun titrisation, formerly called the FCC, le fonds commun de créance, and the special purpose vehicle is going to buy this portfolio by getting the money from investors, either by issuing one tranche or many like this one. And when you issue several tranches, it's like selling a building, but you're selling the top floor to a separate investor, the second floor to another one, and the ground floor to another one. The difference between these different tranches here is the risk. So you can see here an example where we have 100 reference entity, but it could be loans from reference entities like business loans. It could be student loan, it could be auto loan, and so on and so forth. That would flow to the SPV. So it will actually show up in the balance sheet of the SPV and out of the balance sheet of the bank, and on the asset side, obviously. The SPV, to finance that purchase, would issue, in this case, several tranches: senior tranches, the mezzanine tranche, and then the equity tranche. So the interesting thing about this is the reference entity may or may not have a rating. Okay, individuals, we don't have ratings. Companies may or may not have a ratings, but yet what it is issued to the investors on, if you look at the senior tranche, it's rated AAA. So obviously AAA, it's the top rating. So we can create a AAA tranche based on a pool of loans that are not rated, or that could be rated B, let's say, or B minus. Okay, that is called credit enhancement. So the credit enhancement is the possibility to actually create AAA or AA out of something that is either not rated, or it's rated but at low rating. So the SPV would issue several tranches. The interesting thing here about these tranches is that we can get several investors. For example, some investors are only interested if they buy a AAA. Some of them are just because they just want to invest in AAA. Some of them just by regulations, they cannot invest in anything that is below BBB minus, that is non-investment grade. So they're going to target certain ratings. The reason why we can get the AAA here is what we call over-collateralization. Over-collateralization is what? It's actually, when you look at the portfolio reference entity here, you have 100 million, but the senior tranche, it actually has a size of 88 million, which means if really there is, if we were to have default, we would need a lot of default to hit the tranche, because the first one that would be hit by the default would be what you see here as the equity tranche, which is usually not rated. And then once this tranche is exhausted, we actually hit the mezzanine tranche. So in fact, there is this, in terms of cash, all the cash that comes from the pool of loans here would actually go and pay first the holders of the senior tranche. And if there's enough money left, we're going to pay the mezzanine holder. And if there's anything left after that, it will go to the equity. It's a little bit like, when you buy stocks of a company, if you're a stockholder, but you are at the very end, but you're residual. So if the company filed for bankruptcy, we're going to have a liquidation. If you have a liquidation, you're going to be at the very end. Above you, you're going to have some more senior stakeholders, not stockholders. So the stockholders are the equity holders. It's the same thing here, and that's what we have. So all the money that will flow into the SPV will be distributed to first the senior tranche holders, then the mezzanine holders, and then the equity holders. The fact that we have that priority along with other mechanisms can make it possible that we have AAA. So in fact, it's a bit more complex to calculate because it's all about expected loss at the portfolio level. There's certain techniques for that. But the idea is this is how it works. So we can target different investors because some investors are willing to take the risk and buy in the equity. Usually, actually, first in this market, the bank that was doing the deal would actually was holding the equity tranche. But then we had an appetite for the risk that was much larger. That we had some investors actually invest in the equity tranche. So the different types of securitization already said it. So we have, except the ABCP, so we have MBS, the mortgage-backed securities, they're backed by a real estate loan, right? So we have RMBS when it's backed by residential mortgages. We call them CMBS when it's backed by commercial mortgages. Commercial mortgages, for example, are buildings, right? Office buildings, hotels, shopping mall, etc., etc. Then we have the other section, which is the ABS. ABS it's for asset-backed securities, and it's backed. So it's the same process, but instead of having mortgages, we have auto loan, consumer loan, credit card, receivable. We have also other types like student loan and so on and so forth. Another category of securitized products are the ABCP, which is the asset-backed commercial papers. The asset-backed commercial papers are short-term papers, basically. Okay, so there's also another section, another type of securitization, which we call synthetic securitization. So we are able to transfer the risk here, the credit risk, but when it's synthetic, we are using basically the credit derivatives, for example, credit default swap. So why securitization, first of all, is interesting? First of all, it allows to transfer the risk. It allows also to unload some of the reserve that were held because of capital requirement and the Basel III. It allows also a cheaper funding, because obviously if you have a portfolio as a collateral of mortgages or company loans, whatever, this portfolio obviously doesn't have a rating, and it's not, and the average interest rate is going to be higher than the AAA tranche that you are issuing. So the thing is, when you're going to sell your tranche, the AAA, well, the AAA doesn't pay a lot, right? It's AAA is the highest level of rating, so you're not going to pay a lot. But yet, to make it interesting, the return on that AAA should be higher than what you would get, for example, on a German bond or a UK gilt or US Treasury bonds. So that, in fact, allows you to have a cheaper funding. Diversification also, because it's a different, new type of product that appeared a while ago, but we had much more securitized product since the 1990s, although it started way before, especially in the 1960s in the US. So the risk return trade-off is interesting. And the arbitrage also, which is something else, but it's basically the difference between the spread, the yield that you would receive on your portfolio of loan, and the yield that you will be paying to the investor to which you have issued those notes. So this is just to show you, but I have to go a little bit quicker. Now, the different types, I'm just going to move on, okay? I want to show you that one thing, that financial crisis, obviously, there was a lot of critics on, securitized product. And I just want to show you one thing, and then we'll see how that could work with Tunisia. In 2008, the 1 to 4 family homes were worth 23 trillion. Out of the 23 trillion, you had 12.3 trillion in equity, and the remaining 10.7 were on mortgage. Out of that, 6.3 were securitized. So about 60% of the mortgage, of all mortgages, were actually securitized. And in the US, it's a bit different. You have those who are the non-agency. You have the agency and the no agency. The no agency are the bank, the other mortgage lender, and so on, who proceed in that area. And we have the agency ones, which we call the Fannie Mae, Freddie Mac, Ginnie Mae, and Sallie Mae for the student. That would be for the student loan, not mortgages. So here, Fannie Mae, Freddie Mac, and Ginnie Mae. The other ones are the non-agency, and they, when they securitize those products, they did it in the US with different types of borrowers. But the borrowers have different risk profile. Some are riskier than others. Those that we call the subprime, because their risk is much higher than the other ones, and yet they were able to borrow in the US. There's a market for that. They pay a higher interest rate, but they were able to do it. The reason why we had the crisis, it was not really just because we had a lot of default. It's really more about the liquidity issue that happens then after that. So we had a liquidity crisis, but that was, you could say that it was a little bit triggered by the subprime crisis. Anyway, I'll have to move fast. So just in terms of volume, market in terms of securitized products was at about half a trillion, I'm sorry, for the first half of 2020, so around 400 billion actually. So it was down actually from 2019, but we expect the market for 2022 to actually reach 1 trillion approximately for the entire year. So that's 1,000, and I'm talking about issuance. I'm not talking about outstanding. Okay, I'm just talking about issuance here. So I'm just going to move on. Okay, now in Tunisia. So I was very interested in the securitization in Tunisia. So I was trying to find, deals, and I found out that there was a law that occurred that went out in 2001, July 2001. But actually, so far, only 2 operations, 50 million dinars each, were initiated, respectively in 2005 and 2006, by the BIAT, actually, so far. So that is very, very, very low, because it's 50 millions each, so that's a total of 100 million. Think of it with the exchange rate. That's really not a lot. That's very tiny, especially compared with the size of the economy. So it's not a big size, but everything is relative. Morocco has started to actually do securitization just slightly before, but it's about the same period. And then they have actually changed regulations in 2013, so they were able to foster a little bit that field. And actually, I think these 2 operations were done with Maroc Digitalization as well. So only 2. So if we look at the MENA region, the Middle East and North African region, they represent, the securitization represent about 0.2%, which is very, of the global securitization market, which is very, very low. We have Dubai, who's actually has over $11 billion of residential mortgage-backed securities. Kuwait actually is waiting for securitization of about I think 20 billion of receivables. So given that the global securitization is huge, to reach 1 trillion again in issuance approximately in 2022, why should Tunisia develop securitization? Well, we saw quickly the reason why we should actually they should develop it. If you think of the interest in securitization, is either from the investor point of view, for the issuer point of view, okay, for the banks, or companies, or private companies other than banks. I think in Tunisia only banks can do it, so they should probably open it a little bit. But it actually has the first impact that I thought it was for the household. The reason why in the US they moved very fast on securitization back in the 1960s, it's to create a market, a mortgage market that is much more liquid. So it's to increase liquidity. So if you increase liquidity in that market, you actually increase access to borrowing to a lot of people. And I'm not talking about only mortgages. Think of auto loan, for example, what type of business that could represent. And at this time where interest rates inflation is quite high in Tunisia, I think it's around 7%. And that as a result, interest rates are very high in Tunisia. If someone who wants to borrow now would pay 11 or 12%, because of the policy rate from the central bank is somewhere, I think, around 7, and you add to, or 8%, and then you add to it a few points. So as a result, obviously, we can end up, in a market that's going to be very tight in terms of borrowing, especially think about auto loan. The highest asset that is mortgaged, that is securitized, I'm sorry, it's residential mortgages. And then you have auto loans. So for example, in Europe, ABS auto are very big. It's very big. So I think that should be a venue for Tunisia to try to develop. But of course, securitization cannot be developed if the regulation doesn't allow it. So probably should hope for a new set of deregulations on that end to increase the market because it's really slow. It's really low, especially now that Moody's has downgraded Tunisia with a negative perspective, a negative outlook from B3 to CA1. Obviously, the cost of funding is going to be more important. So benefits for the issuer, okay, access to cheaper funding, unload credit risk from its balance sheet, arbitrage eventually, being able to build customized tranches for, say, institutional investors, but most specifically, increasing liquidity of the market, and that would benefit obviously companies and household. Thank you. I'll be happy to take any questions.
Thank you so much, Dr. Foued.
Yeah.
So we have so many questions, though I'm not sure if we have enough time to discuss them all.
Mm-hmm. Yeah.
Okay, so first one is from Imen. She's asking, I'm afraid that comparing eDinar to banks' mobile application is irrelevant. eDinar consists on transferring the money in your account and put it into the card bank's mobile application.
Mm-hmm.
Are the image of your bank account. I think it's a comment, not
yeah, okay. Okay.
Not a question.
Not a question. Okay.
She has a question.
Yeah. Yeah. Okay.
Yes.
Go ahead.
Go ahead if you have any comment.
No, it was just like I heard about the eDinar,
Yes.
but it's still it's in its infancy. I mean, it's still not used widely. I heard of many things. I mean, there's a lot of things that have been going on actually by the central bank. They did a lot of stuff in terms of digitalization, but again, it's still at a level that is very, very small. Go ahead.
Yeah. Yes. Another comment, I guess. It's not accurate to say that we do not have a CDBC in Tunisia. We do have CDBC called eDinar. We just need to scale the experience from La Poste to all the banking system in Tunisia.
Yes. I heard that too. But again, it's about size. I'm not talking about the fact that it didn't exist. Even in Sweden and in other countries, they also have tried. Venezuela has also tried that. But I'm just talking about the size, making it generalized.
Okay, another question from Ines. Why wait and see and not lever up on the eDinar experience? CDBC is cost-effective, save on printing cash, better and easier access. We do have a good mobile penetration in Tunisia. I understand that we did not deal with crypto given currency controls and capital controls, but shouldn't we still try to push for CBDC?
I personally, that's what I say. It's my opinion, but I think it's better to wait and see because there's a lot of ongoing work right now on that area, and you have very large economies putting a lot of resources into that for now. I think it's better to wait and see what will happen because we might have some changes along the way. And maybe we can save on cost in terms of resources. That's what I'm saying. Let the big banks be first, I think, and then after that, maybe we can save some money or some resources by using the fastest way and the best way to do it.
Okay, one last question from Aziz. Talking about the volatility of cryptos, what's the factor or factors which decide the value of a cryptocurrency? Is it the expectation of the buyer that he will sell it with a higher price, or are there other factors?
Well, for example, let's say if the volatility, that's one of the problems of the crypto money. So because of large swings that we have in the markets, obviously it's going to be hard to say, let's say you're going to pay your rent in Bitcoin, because if Bitcoin today is 10,000 and you pay your rent in Bitcoin, that's something. And if the next month the Bitcoin is 20,000, obviously your rent is going to change drastically if you were going to pay in crypto. So the problem is we have a lot of volatility. You can just look at the market since the beginning. I mean, now we are at a very high level, but I think that could be very risky to ignore the volatility, because again, we can't price that out. Money by definition have to have some stability. So if we have a lot of volatility, that's not going to make it a medium of exchange. That's not going to happen. It's just not possible. So we have to reach at some. That's why we have those stable coin that came in. So we have to wait until we have less volatility. But as far as I know, last time we went to a few years ago, the Bitcoin went to 20,000 and it went down all the way, I think, to 3,000. Then it's back up now to almost 60,000. So we've got a lot of volatilities there that we cannot use that as a medium of exchange unless a lot of risk is taken. So as long as this volatility, and then I know you say, well, if you buy it, because you said, yeah, but you trade in that. Yes, you can, as you can trade gold, as you can trade stocks. Okay, you buy and sell and you buy and sell. But look at the swings in prices.
Yes.
It's really big.
I have one last question.
Yeah, go ahead.
It's mine. So I want to know if you do personally believe in crypto money. Like, do you? Because last time I was seeing a financial expert talking in Bloomberg, and he was very furious about crypto money. Like, he was warning people from investing in Bitcoin. He said it's not something concrete. It's virtual money. It's not something that's based on something concrete that does actually exist. He was instead inviting people to invest in gold, in gas, in things that have been always stable. So I just wanted to know your personal opinion about people investing in Bitcoin.
Yeah, my personal opinion is that, well, right now a lot of people are talking about it. A lot of people are buying it and trading it because there's profit to be made. Okay, but I don't think it's going to stay. I doubt, because I think that the regulators are not going to let it go. Look at what China did, and just wait a few years. Maybe they don't want to go very brutally on this in terms of the regulators, because now it could pose a systemic risk. But I don't think that that's going to last. I think at some point, and I'm okay with the blockchain technology. That is fine, but I don't think one crypto, the Bitcoin, could stay there forever. I think it's going not to be like the same story as the tulip in Holland, but it's probably something that's not going to stay this way. Besides the supply, the supply is going to be limited to 21 million. I think they minted now about 18.5 millions. So we're going to have some issues there. But in terms of crypto as a currency, I don't really buy it, because I know at some point, whether it's 3 years or 5 years, central bank will have to want to get back, the control over that, and they won't let that go. But it could be a commodity, like, okay, well, like you buy gold, or like you invest in the climate, or it could be a commodity like gold or silver, or you can trade it like coffee or whatever, but not a currency. I don't think in the long